JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 19th of January 2023. So welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. So guys, now then, let's jump into the charts. So a bit of an eventful evening we had yesterday. So yep, looking at the picture here, Nikkei 225 today, it managed to decline and managed to move back inside the pattern. So long story short, it went back into the so-called triangle pattern that I talked about. And look, yesterday I said to you that if we stay somehow above this area, above that 26,620 territory, then yes, we'll continue pushing higher. Yes, we see a closing of this candle, but of course the declines excuse me, in the US markets did push the cash index back down, and that's why we have an opening here in the main index here, and we have the opening much lower. And yeah, so at this point I would say, look, if we do pop back above this 26,620 territory, then yes, I'll go to the upside. But if we stay within this pattern, well, we could see some more moves to the downside, a move back to this upside line initially, which I'm still keeping on my chart, and then maybe towards this other upside line, which is also at the same time the lower side of the potential triangle pattern. Shanghai Composite, this one's pushing higher, so Chinese market is continuing to kind of, or at least trying to continue to go further north. Look, at this point, yes, if just to kind of stick to purely to the technicals, then yes, I am a little bit more bullish than bearish on this one. We still have around 50 minutes left of trading. And if it continues, let's say today and tomorrow, if it continues to trade above this 3,226 territory, yes, I'll continue aiming to the upside, where my next target is the area near the 3,278 or maybe even the 3,295 level right here. Now, in terms of the downside, well, as I said before, I would like to see a move below the 200-day EMA. This is from where I'll start looking at the downside. If we do get that, then yes, I will consider maybe a bit of a move here lower. So let's keep that in mind. But at the moment, yes, it is looking a little bit more positive than negative. However, due to the kind of overall sentiment in the market, in the equity world, I don't know if this upside here on the Shanghai Composite could remain strong. So, you know, that's why let's yes, let's aim for the upside, but with a, you know, pinch of salt. And another thing here as well. So look, I think, and maybe this is me again trying to see something where it's not. Maybe it's not even a range. Maybe it's could be something like this here, where maybe it is a rising channel. If that's the case, then we're hitting the upper side right now. So that means that we could see a reversal back down. So it's a very thin line. You need to be, I would say, careful here, because yes, on one hand, maybe it is actually a range, but on the other hand, maybe it's actually likely a rising channel. If it is a rising channel, then we're hitting the upper side of it, and if we fail to move above this upper side of it, then we could see a correction to the downside. Now, Hong Kong's Hang Seng Index. Look at this, guys. I mean, I haven't looked at this one for quite a while, but overall, I mean, this one is quite positive in a way. Probably one of the most positive indices here. So, look, we have broken this downside line, and look at this. I mean, I kept on talking about this previously, where I said that whenever we break a trend line here, we kind of come back and retest it from the other side, and then kind of rebound and push higher. So yeah, we got that. We got that move. We got that push above this. Just bear with me one moment, guys. So yeah, we got a push above this 200-day EMA. So yep, everything's kind of leaning a little bit more towards the upside here, I would say. But again, the same story. With the whole kind of global economy, I mean, if that one starts pushing lower, then well, we could expect maybe a move to the downside. Look, in general, I would say this is quite technical, especially in relation to these trend lines. So at the moment, what you can do here, for example, if everything starts going down the drain, do apologize, risk disclaimer popped in. So if everything starts going down the drain, I would say then, look, this could present itself with a nice opportunity for a short maybe, especially if we break this upside line below this, and we fall below that 21-day EMA. So that's why, yeah, I mean, at this point, although everything's looking quite positive, you have to keep an eye on the broader market in general. What's happening in other indices at the moment? US is not really. It's kind of trying to wipe out some of those gains. Will it succeed? Will the bear succeed in doing that? Well, let's wait and see. At the moment, we're watching everything carefully. In the past couple of days, you thought that, hey, maybe we're having a wonderful move here, to the upside, but yesterday's kind of decline proved that, hey, the market is still worried, people are still worried, investors are still worried, so we need to be kind of careful and cautious. Look, the Hong Kong's Hang Seng here, I would say, for now, I am leaning towards the upside, but I need a push above this 21,947 territory. So let's keep that in mind. Just trying to see if I can get some info here on the Hong Kong Hang Seng. Okay, right. Okay, that's fine. That's not something that. Quite important, but anyway, right. So yeah, like I said, for the downside, guys, pretty straightforward here. Keep your eyes on this upside line and this 21-day EMA. Now, Dow Jones Industrial Average. There we go. Biggest loser yesterday, declined. Look at this drop. I mean, look. Let's find that January open. Where's that January open? The 3rd, I think it was. Yep, the 3rd. So it's somewhere around here. Let me just, so yeah, it's somewhere around this 33,136, and we are coming closer to it right now. So we're kind of wiping out all the gains made this year so far. Again, it's not much, but still a gain. Look, and when I previously had talked about this, and I said that if we pop above this 33,419 territory, I'll go higher. And look, it went higher, but it didn't really reach my target here. I would say completed about 70% of my move here, and yeah, it then started reversing. Look, in general, it's a great result, and can't argue with that, but now we have to adjust everything, because again, we need to adjust to the constantly changing market here. And one thing that I'm going to be watching here very carefully, if ignoring all these lines, I will keep an eye on this other less a horizontal line, which is an upside line taken from the low of the 3rd of November. Now we're approaching that area very quickly. Look, again, it's very subjective. It can be drawn this way, which probably could be an easier option. And look at this here. If I draw it this way, then we have a perfect match here with the opening level here of this year, near the 33,136. So in other words, if you're looking for some lower levels, guys, you could keep an eye on that hurdle. And then we can go from there. Basically, more sellers could join in here. But of course, if this is just a temporary correction before another possible leg of buying, then something like this could be possible. So keep that in mind. Be cautious, be careful, guys. I mean, if you're not comfortable in trading this right now, just kind of leave it. Don't worry. I mean, it will present itself with another opportunity. At the moment, the cash index is sitting at around 33,197. So yeah, that's still above this hurdle, but very close to this upside line. So let's watch this today. Now, NASDAQ 100 as well. Look, I talked about this, and I said that if we push higher, but we struggle to, let's say, overcome this downside line, I will aim to the downside. And at the moment, yes, I'm aiming for one. However, again, this is the problem. We have to be a little bit more on the cautious side. Maybe it's a bit of a retracement here, because look, we're still above the 21-day EMA, so there is still hope. We could see a move higher, and we could see a nice rebound here, a push back up, and maybe then a break of this downside line. But again, at this point, yes, it is shifting a little bit lower. Can the bears maintain this trajectory? Well, I would say they could. More bears could join in if we do fall below the 21-day EMA and then the 11,000 mark. Now, the German index, DAX. Now, this one is an interesting one, because yesterday, if you remember, I talked about this and I said that keep an eye on that 15,200 level. And, well, if it continues to provide resistance somehow, if we continue to trade below it, then there is a chance for this one to move lower, move to the downside. Now, I will have to redraw one of the levels here that I want to pick up, the 15,084. So if we do fall below that hurdle, I will start aiming for this excuse me, for this move back to this 38.2. Or initially, of course, I will aim for that psychological 15,000 mark, and then my next target will be that 14,860. For the upside, pretty straightforward, guys. I need to push back above this 15,200 territory in order to go higher. And if we let's say push above it and we stay above it, then yes, I will go to the upside towards that 15,542 zone. Now, jumping into gold, this one is a bit of a roller coaster ride. Yesterday, look at this spectacular move to the upside. Initially, in the morning we were falling. In the European morning, we were falling lower, and then we reversed higher. By the time by the time the US market opened, we were kind of trading here on the highs, and then we started reversing sharply to the downside. Right now we're seeing a bit of a retracement, but to be honest, it's all okay. Look, we're still hanging above that psychological 1900 level, so if we do fall below it, I will aim for that 23.6, which is roughly around that 1881 zone, or even better, maybe this beautiful 1880 level could be a nice good target. For the upside, pretty straightforward. A push above the 1929 level is required. This would confirm a forthcoming higher high. Now, jumping into WTI oil, so declined, and look at this. After testing my area, it declined. It moved back down, and most importantly, it's now falling below this 78.58 level, which is creating this negative atmosphere, I would say. However, we are still above the 21-day EMA, so there is hope that we could rebound. Now, if we do continue to slide here and we do fall below that 21-day EMA, my next target is the this upside support line taken from the low of the 9th of December, and then we will take it from there. And then we will go towards this upside line. Yes, and if we do break below the 21-day EMA, we'll go to the upside line. If we clear that one, guys, I mean, this is where the excitement could start for the sellers, and we could see further declines. And to be honest, I mean, in general, if you just kind of look at the market and what's happening, look, in general, people are or not are becoming, but already became more cautious in general with the spending, because everybody sees how much everything costs and everything is expensive. And to be honest, it doesn't matter where you are in this on this planet, but everything is expensive. And unfortunately, that's kind of the goal of the Fed and all the other central banks in order to maintain inflation, because this is the tool that they always use in order to maintain inflation is for us, to lose our purchasing power. On one hand, I understand, yes, it is logical. On the other hand, of course, when you're getting way too personal about it, then yeah, that's not a very pleasant thing. However, we try to survive in these conditions, and given all that, I mean, look, the demand has fallen a little bit, and I think that the fact that the interest rates have rose, yes, it kind of stopped people from stopped banks from lending too much, and and now we can see a bit of a slowdown in the business development, and of course that's why we have our indices falling apart, because or at least starting to fall apart. And look, in a way, I would say from the market perspective, from the maybe an investor's perspective, yes, we need a decent correction, and we need a decent decline, and I think oil will reflect that as well, because look, demand is a little bit on the lower side right now, and that's why oil could continue drifting to the downside. And another thing, of course, yesterday we had the U.S. crude stockpile. That one came out much higher, so we have more. There is more oil in the U.S. So yeah. And sitting there on the side. So yeah, demand has fallen. Like I said, oil oil reserves are increasing. So yeah, the price might go down here a little bit more. However, I will get even more excited if we do see a break below this upside support line taken from the low of the 9th of December. DXY, the dollar index, very quickly on this one. Yesterday we had that move. Look at this. We had that move towards my target, the 101.30. Came very close to it, but failed to test it, and we rebounded, and now we're kind of back to the same area where we were before. Look, at this point, I said it before, in order for me to go higher, I need to see a push above this 103.45. Simple as that. Because at the same time, we would climb above the 21-day EMA. If we continue to trade below it, yes, the scenario is to the downside, and I'm still then aiming for my 101.30 zone, marked by the lowest point of May of last year. Ethereum Classic declined. So after we tested the 200-day EMA, we drifted back down, and we're now kind of oscillating around this area. Look, was this just a nice good move here to the upside to collect some buyers? Probably yes. Excuse me. Probably yes. A lot of people started jumping in, and now we're seeing a drift back to the downside. So, look, I think what I want to do here is I want to remove all the drawings and kind of start fresh. Overall, you can see yourself that the trend has been to the downside since what? Since that massive rally in 2021. Look at this. I mean, this was just amazing, and then since then we kind of were on a slide again. Don't get me wrong, I think that at one point we will get something like this again, but when will that be? Of course, nobody knows. One thing that we can try to do is try to position ourselves. If we look at it from the longer term perspective, then maybe if I grab a trend line here from this peak all the way down here, not capturing this one because that's way too much speculation here. This is a little bit more normal trading activity. So yeah, you can see that we have been on a slide, drifting lower. However, on the downside, I mean, we were also kind of holding on to this right here. And look at this beautiful thing here. So in a way, I would say as long as we remain above this upside line, I would say then there is still hope that we could see a nice good move here to the upside, and especially if more buyers jump in on a break of this downside line as well. So it could be quite interesting, but like I said, if you're if you're looking for something a little bit more reassuring, then yes, wait for a break of this downside line. But if you're if you want to gamble it, then you can gamble it to the for the long if we continue to trade above this upside line. If we start breaking this upside line, guys, well, brace yourselves. We could see even much lower levels, maybe even going all the way to its kind of like the beginning here, when we in 2020 here, you can see we were around like what, $5-6 here, for one Ethereum Classic. So again, an interesting one, but let's keep an eye on this, guys. This could end up being something quite attractive later on if we remain above this upside support line. Jumping into a few pairs, guys, very quickly. AUD/JPY, look at this. I mean, I talked about this yesterday, and I said that, hey, we were breaking this downside line, and I said that if we stay above it, I will go to the upside. What did we do? We failed to stay. We failed to stay, and we moved back to the downside. And look at this. We fell back below the 89.82 territory and ended up, we're now almost testing this, my target here, the upside support line. Now the question here is what to do, to chase it or not to chase it. That's a good question, because at this point I will say I wouldn't chase it. I would just observe it, because look, if you miss this, that's fine. It's not a problem. We'll get another a good move here later on at some point. So right now, yes, let it test this upside line. Let's see if we can do that first of all, of course, initially. But if we do test it, then I'm gonna keep an eye on this. If we break it, then yes, I'll go towards that 87 territory, and then I'll take it from there. Maybe if we break it, maybe we could go further south. But at this point, look, it could go lower, it could test this upside line, could rebound back up, it could start oscillating somewhere around here before it actually makes that big move. AUD/USD, so beautiful, 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 beautiful. I said before, look, I said to keep your eyes on this upper side here of this, upside resistance line. I mean, it's not a thing here, but hey. On the other hand, I said that, hey, maybe this is forming something of a rising wedge, and so far it seems to be the case. However, for a rising wedge, we need to see a break of the lower side of this potential pattern. But at this point, we're not really getting anything like that, so we're just trading within it. So I would say, look, at this point, just observe this one. However, look, I said to you yesterday that if we do fall below the 0.6950 territory, I'll go lower. Well, this is what's happening right now. We are going lower. I'm aiming for this 0.6860 territory, which is near that 21-day EMA, and then I'll take it from there. If we do break this whole thing right, let me just grab this arrow. If we do break this whole thing right here, this upside line, then yes, I will consider a move to the downside. USD/JPY, looking at this picture here, I would say we're near this downside line, or should I say we were near this downside line, taken from the high of the 21st of October. I talked a lot about it, and I said that if we stay below it, if we come close to it but fail to break it, then we still could have something like this. So yesterday we had a beautiful pop. Of course, that the whole thing about the the BOJ keeping their interest rates the same, yen devaluated, but then the markets reversed sharply to the downside. The equity markets reversed sharply to the downside, and this is where yen buying, because of the safe haven status, occurred. And that's why all the gains here, or all the losses of the yen yesterday against, for example, the US dollar, were kind of wiped out. So now the yen buying is back on the table. It's kind of becoming an attractive option. I would say I am still leaning a little bit more towards the downside, towards that 126.36. That's my main target for now. Of course, if we clear it, then yes, I'll go further south, but let's keep it short and simple. For the upside, I still need to see a break of this downside line. If we do somehow, let's say, push back up today, I'm still going to be observing this one, and I'm just going to be, if let's say if I want to go higher, then I will be waiting for a move, a break above this downside line. USD CAD, so this one popped nicely and popped above this 1.3460 territory and pushed above the 21-day EMA. In a way, I would say I am leaning towards the upside. However, this is USD CAD. This is one of my least favorite pairs. Although I'm quite excited to watch this pair, how it moves, and I don't really trade it because again it's a tricky one, way too tricky. If you do like it, great. I mean, guys, I know I'm taking my hat off in front of you because if you can trade this one, wonderful, congratulations. This is one of a difficult ones to attain, but again, it does present itself with nice opportunities. So that's why I still look at it with much positivity in my eyes. But I like to look at it. But again, at the moment, I would say it's doing things that I wanted to do, so that's great. So let's see if it can continue doing that. But look, as long as it stays above that 21-day EMA, I would say I am leaning towards the upside. The only thing is that I'm going to go slowly. Ideally, I'm aiming for this 1.37 territory, but given the history that it might go a little bit closer to that, maybe 1.3650, and then kind of reverse back down. So let's see. USD CHF, this one's interesting, and look at this. We broke the lower side here. I talked about that 0.92 territory, and I said that if we clear it, I'll go lower. We cleared it, we went lower. So now what's next? First of all, a few adjustments have to be made. I think that this is what I want to mark here. Look at this beautiful correction, beautiful test of the of this little hurdle right here. The 0.9086, and we've tested that perfectly. We've rebounded from it, pushed it back up. Now the next question, what to do further? Well, a few adjustments. Like I said, I'm making a few adjustments here with the levels. The 0.91, 95 level, I'm still keeping an eye on it. If we continue to trade below it, I will aim for this 0.9686 area again. I'm going to aim for that level. We might come closer to it, we might not even hit it, we might rebound back up. So at this point, yeah, that's the game plan. And another thing which I wanted to show you, and let's see if this is going to work out or not. Where's my parallel channel? So something like this, I think this is the better way to try it. Yeah, so roughly like this, something. Okay, I think this needs to be lifted a little bit. This is the problem with these channels all the time on TradingView, because they get skewed a little bit. I think maybe no. Okay, guys, I think yeah. Let's you know what? Let's ignore this, and I'll probably do it my way, the old-fashioned way. So something like this. Okay, look, we could be having here a falling channel, and for now it seems like we do have a falling channel, and it seems like we are kind of testing the lower side of this, and we should say yesterday we came very close to testing the lower side of it. We rebounded, and so if you're looking for some higher levels, guys, probably the easier option is to wait for a break of this upper side of the falling channel and then go higher. At the moment, as long as we stay inside this pattern, there is still hope that we could see further declines. GBP NZD, boom. Boom, boom, boom. There we go. We broke the upper side of the falling channel, and I talked about this, and I said that, hey, if you want to go higher, wait for a break. We got that break. We went higher. We are currently finding resistance near the 100-day EMA. My next target is the 200-day EMA, actually. However, this is where I'm not gonna start, getting way too excited with the upside. I'm gonna go slowly on this one. If this is a very tricky moment, if we find resistance like we have, for example, had a few times already, If we once again find good resistance right here, another decline, guys, could be possible. We could go back into the falling channel and we could start moving to the downside here. So yeah, keep that in mind. At the moment, like I said, I'm aiming for the upside, but I'm accepting the fact that there could be some obstacles here. If we clear that very easily, yes, further upside is possible. GBP JPY, I also talked about this one yesterday, and I said that, hey, if we stay above this downside line, I'll go higher. What we did, we failed to stay. We're now moving back to the downside. And the fact that, yes, the whole kind of yen buying thing right now is back on the table. You need to be very careful. Let's see which one is going to outpull here which, because on one hand, GBP is not the weakest one. It's quite relatively strong, I would say, right now. But again, which one's going to be the stronger one? Will it be the whole safe haven play, or will it be, you know, the British economy that's going to be attractive for investors? Let's see. Let's wait and see. This level has to go. I think that's no longer needed. And what I'm going to do here, I'm going to take a very, very conservative approach and wait for a drop below this area, below the 155.65 in order to go lower. For the upside, still keeping an eye on this downside line. I need to see another push above it. If we do clear it, I'll go to the upside. GBP USD. Beautiful move to the upside yesterday. Look at this. My target has been reached. If you remember, I talked about this and I said that as long as we stay above this 200-day EMA, or in general above all of the EMAs, I am aiming higher, but only up until this 1.2444. What we did, we stayed above it. We stayed above all the EMAs, and we reached my target, the 1.2444. Mission accomplished. Now what's next? Next will be the same 1.2444. It will act as a good barrier. If we clear it, I'll go higher. For the downside, I would need to see a drop somewhere below, I would say, this 200-day EMA, below the 21-day as well. Of course, that's automatically, and below the 1.2126. If we fall below it, I'll go a little bit to the downside. Euro JPY, similar story as with the other yen pairs. We had a fantastic rally yesterday, pushed higher, then look at this, wiped out all the gains because everybody started jumping into the yen, and today we are flirting with this upside support line, which is at the same time also, or could be, the lower side of the triangle pattern here. So look, we've already broken it. Can we drop again below it and stay below it? That's a good question. I think in this point a level will come in handy for us. For example, this one right here. The 138 point, well, actually the 138 zone. If we fall below it, I'll go to the downside. My next target is this one right here, the lowest point of January, or the current lowest point of this year, the 137.39. If we clear that, guys, well, this could open up the Pandora's box. And look at this. I mean, this is, like I said, this is quite interesting. It's a very strong area of resistance here. If we clear that, guys, this, as I said, could open the Pandora's box, and we could start sliding further south here. I mean, we have a bunch of levels that I'm keeping an eye on, but I would say my main target would still be this 133.40. Euro CHF, yep, something that I'm keeping a close eye on today. I think the data came out already. Yeah, the PPIs from Switzerland. And of course, we continue to see the whole Davos economic forum happening. So yeah, look, at this point, I would say this. Previously, I talked about the pair, and I said that as long as we stay above that 200-day EMA, I will consider something like this. But what happened? We fell below it. We fell, and we ended up testing this upside support line taken from the low of the 12th of October. Now, if you're looking for some further declines, I need to see a drop below this. I need to see a drop below this upside line, and then I'll go lower. This level that I had previously here, I need to remove. It's not really valid. I think the 0.9817 is the more valid one. So yeah, if we break this upside line, I'll aim initially for this hurdle, and then my next target will be the 0.9723. And finally, EURUSD, guys, 1.808 is the level where we are currently balancing at. Yesterday, look, I talked about this, and I said that, hey, this could be something of a bullish flag or something like that, or the bearish three. Always get confused with those, the bearish three or the bullish three. Just bear with me. Yeah, that's the that's the bullish three. There we go. So again, it depends on the bullish three method. Yeah, you get confused with all these guys, bullish three, bearish three method and stuff like that. So this was the bullish three method. So because whenever you have a bullish candle like that, and then the three candles go stay within the body of this big one, and then this fifth one explodes here to the upside, and this is what happened. This is what went good here, what went according to that whole idea theory. Look, at this point, I would say the easiest option would be just to kind of wait for a push above this barrier right here. Above that 1.0874, because again, the fact that yesterday we failed to stay above that area, above that hurdle, that's kind of causing a few issues here for me personally, and with the upside scenario. So that's why I will keep it. I'll wait for it. I will wait for a drop below the 1.0736 at least here in order to consider a move lower. And I would like to see a push above this 1.0874 in order to go higher. So guys, that's it for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything, guys. I really appreciate that. So thank you very much for your support. If you want to catch me tomorrow morning, as always, at Maturator's Espresso, that's 7 o'clock GMT time. For now, have a beautiful trading day, guys. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.